Welcome to my page, you guys. Another episode. We're talking about investing right after coronavirus, what it's going to look like for you, and ultimately why you need to own some real estate. Hey, before we get started, I want you guys to like, share, and subscribe. I promise I want you guys to get value out of this. So let's jump right into it. Let's get started. Real estate equals inflation hedge, right? It's the only thing. Hard assets are the only thing that allows you to make money during a time that the government is pumping out stimulus packages. They're pumping out trillions of dollars to the economy to fuel the economy. The only thing that's going to benefit that is real estate, and actually hard assets, period. So the things that fluctuates are stocks and bonds, right? Cryptocurrency, things of that nature, savings, cash. Yes, if you have $100,000 in your banking account or in your checking account, what's going to end up happening? They're going to push trillions of dollars to the marketplace, and all of a sudden your $100,000 isn't worth the $100,000 anymore, because yesterday it could buy so much more than what it could when they pumped trillion dollars into the market. If money can be printed, it's really not worth that much, right? So when we're talking about inflation and how inflation works, whenever they print money, the current dollar that you have in your wallet, the current dollar that you have in your savings account, is actually worth less because now there's more of it. So anything that can't be bought, anything that can't be duplicated by a computer screen, is probably going to end up being a better asset to have. What are some of those assets, you ask? Real estate being one, right? Real estate is one. You got metal, you got leveraged real estate. So appraisal, just leveraging that real estate. Why? And this is what ultimately happened. Unlike 2008, where we saw a big shift in the market and everything came plummeting down, there was a lot of rules and regulations that had to happen to occur for Freddie and Fannie to actually start backing these loans to make sure they don't run into the exact same thing, right? Just 10 years, 12 years down the line. So with that being said, they've protected themselves and they're making sure homeowners are safe. But with us as investors, what that looks like for us, it's not going to be as cheap as we can get properties like we did last 10, 12 years ago. And I wasn't even in real estate then. You can't get those properties as cheap. But what's happening is everybody's being furloughed, everybody's being hitting the forbearance period. So with that being said, banks, there's not a ton of foreclosures happening right now. Obviously with the furloughs and the unemployment, as soon as that dry up, there will be foreclosures periodically, and there'll probably be more just because we haven't had an auction in 3-4 months with the coronavirus. But with that being said, what we're going to end up having is housing prices, especially where I'm at in my market, they actually went up. Sales dropped because of coronavirus, right? Because nobody wanted anybody in their house during this time. A lot of people took their houses off the market during this time. But as far as the actual property and building a hedge fund, right, against the inflation, that's happening because once they pump so much money into the market, it's not worth anything. So with that being said, if I had $100,000 and I can go buy a $100,000 house, right? Before COVID, after COVID hit, now I got $100,000, but now nobody's selling, which means it's a seller's market. Ironically enough, right? Because nobody's selling, the buyers only have so much that they want to actually go out there and get. So now that $100,000, you can actually sell it at a premium because you have one of the only houses in your market that's $100,000. Right, or $300,000 or $500,000, right? The only thing that's being impacted right now and that's really slowed down is the big $1 million homes. Outside of that, everything else is being pushed and being pushed out to the market. Everything else is actually selling, and selling pretty fast depending on where you are. So if you're an investor and you're looking to rehab homes and make them extremely nice, and you're looking to sell in that price range, then you stage and nobody's living there, right? A lot of homeowners right now, they're shopping online, but essentially what's happening, they're shopping online and then they see somebody's living in that home and they're saying, you know what, it's not really risk. It's not really the risk versus the reward is not really worth it. It's another one around the corner that's vacant, that has some furniture in it that I think that's just as nice as the other one. Let's go take a look at this one. I think this one might get us, right? So that's what's happening in the market. So right now it's a great time to invest in real estate Because if you own some real estate while they're pumping all that money into the market, you're going to be a beneficiary of it, because that $100,000 is not going to be worth as much, but that asset never changed. It's not like the house took a dip. No, the house didn't take a dip, because their people are still buying houses, and ultimately the house is a hard asset. And if the house is a hard asset, and meaning they're not making too much more of it, right? There's only so many lots where I live in Dallas, Texas. There's only so many lots in New York. There's only so many lots in Las Vegas, right? So there's not a lot that can happen there. You can't pump 1 trillion homes into the market. Over a course of years you can, but you can't pump 1 trillion homes over a course of a couple of weeks. So it's literally a hedge over inflation. So if you're sitting on your home right now, what I would tell you to do during this COVID period, I would actually go refinance that house, and I will pull money out of it. A primary home paid off is not an asset, because if you stop paying the taxes, right, it's going up for auction. Just like if you stop paying for the mortgage, it was going up for auction. So a paid off primary home is not an asset. Now, paid off rentals, paid off real estate that's bringing money in is definitely an asset. So I would definitely recommend you guys go and refinance your home right now. If you haven't had the opportunity to do so, definitely think about it. If you need credit fix, I know a couple of people, so reach out to us. We can definitely help you with that. But definitely pull that money out of that house. And who knows, if I don't have a golden ball in front of me, but who knows, if the market was just to come down crashing, you know what the best thing about it is? If you pull all your equity out of it, say if you have to short sell it for whatever reason, you just take a 30% decrease on your home and you have to do a short sale. Well, at least you got most of your money out of it. But if you was to take your equity, say if you had $100,000 in equity on a $300,000 house and then take a $30,000 deal, you don't lose money, but you lose the $100,000 spread that you had, right? So go out, leverage your home. Always be leveraged on the primary residence. Like I said, it's no different, because once you pay off the mortgage, you got to pay the taxes and you got to pay the insurance. So maybe your payment goes away, but your mortgage payment goes away, but you still have taxes and insurance. So definitely, real estate is the best possible thing out there for any kind of hard assets. Like I said, metal, any kind of gold is definitely valuable. They're pumping this money out here, so gold is getting more expensive. So for all the guys that got not diamond chains, but just regular gold chains, right? They're worth more today because it's a hard asset. So you got to understand what's a good asset and what's not a good asset. Soft assets are things like stocks, bonds, pension plans, savings, cash that's just sitting somewhere. That's not a good thing. Right now, in a time like this, you want to have your money in something that's solid, brick and mortar, something you can go touch, you can feel the metal that's in there. That way you actually have a hedge against the inflation. Like I said, whenever they pump all that money out there, it can't be a good thing. Not for real estate investors. It can't be a good thing. Not for people that own stocks, but for real estate investors, it's a great thing, because you know what? The house that we bought for $50,000 just went up to $70,000, right? The house that we bought for $300,000 just went up to $325, $350, $400, right? Those are the type of appreciations that happen in real estate. That's why it's always best to get you some, baby. Get you some of that real estate so we can be protected against this inflation.